Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Good morning to everyone in the room. Medad, Mark, Graham, Francis, AMD. I got your email this morning, by the way, AMD. Just keep in mind the link for the webinars actually gets updated about 20 to 30 minutes ahead of each webinar. So no need to actually go ahead of time to register for that. Pete, Eileen, always a pleasure to see you as well. So good to be here with you guys this morning. Lots to talk about. We'll be going over Kiwi dollar, dollar CAD, euro yen, crude with a big move here as well with the breakdown to the downside. We'll touch on gold, Aussie dollar. I also want to take a look at euro Aus, which made a little bit of a turnover last night, sterling CAD, and sterling dollar. If there are any other pairs that you would like to review or discuss, feel free to drop them in the message board, guys, at any time during the webinar. Okay, so let's jump right into the charts. Here's what the U.S. dollar looks like ahead of the open of U.S. trade. You see that we got a split decision here, broadly weaker against most of its major counterparts. The yen, strongest gainer on this session. And it's so funny to see this because just yesterday in the webinar, if you were with me on Daily FX, we were talking about all these expectations that now that Abenomics essentially has a second life here, that, continued watered down of the yen is necessary to really fuel inflation, which is what they've been trying to do over in Japan. Here we are the next following day as those expectations from all those banks, as I noted yesterday, a lot of research analysts all talking about the dollar yen long. Here's the yen strongest performer on the session, up 1.37%. So keep that in mind on all the yen crosses, guys. I tweeted out, and we also highlighted in yesterday's intraday update, the euro yen, which made a very nice turnover yesterday, took out all the downside targets. But just keep that yen strength in play. It's not the story that everyone, assumes is going to be the case. And I kind of highlighted that in yesterday's dollar CAD, or Kiwi dollar, updated as well. We got those GDP figures, which were dismal. But of course, Kiwi rallied. We'll look at that as well. Up 0.94% on this session. Aussie up 0.79. Biggest loser, Swissy 0.38. Haven't really paid attention to the Swiss so much. And dollar CAD with a fractional decline there of 0.16%. Okay, here's what the dollar index looks like. Dow Jones FXCM dollar index. Highlighted this yesterday, and we basically said that it still looks vulnerable below key resistance. Remember, we've been talking about that 2016 open at 12,131 throughout the course of this rally with the breakout that we saw last week. Obviously, we didn't quite make it. Momentum was really struggling to hold its ground above 60, and an overnight trade, we went right below near-term support, 1264. The major support from here on the near-term scale would still be down at 1228. I think I cited 1229 last night. That is basically the 200-day moving average, which coincides dead on with the actual median line, the current operative median line off the low. So we still have a little bit more room to the downside before you start to run into any major support, in my opinion. With that said, keep in mind that slope support might come just ahead of that moving average, especially if we make it down there today. So keep that range in view, maybe 12,035 even, as far as near-term support for the index. Here's what it looks like on the near term. Okay, the weekly open is now structural resistance, and that's going to be just under 12,100, 12,099, where we opened the week. All right. So that's the dollar index. Game plan from here, you could see a little bit of a rebound. You're getting some strong divergence into these lows. Price action making a lower low. The oscillator making a higher low. Both reference points below 30, so not a very strong signal, but nonetheless, the divergence is there. Could see a little bit of a pop here, bearish invalidation at the weekly open. By the way, on a real near-term scale for this kind of a move, heading just into the U.S. session to give yourself some reference, a basic retracement puts a basic 23.6, interestingly enough, I was looking at this earlier today, right above the highs that we made in Asia last night. So this key region right here into 1264, near-term resistance. If we do see a breakout, look for a rally back towards 1290 actually, but the broader story would stay bearish below the weekly open. Now, keep in mind that we do have the FOMC interest rate decision on tap tomorrow. As far as this round, I'm not really expecting too much from the central bank. Keep in mind we got the quarterly projections last time around. The only major thing you'll be looking for in tomorrow's release is if the statement explicitly says anything with regards to the possible impact Brexit may have on the timing of monetary policy. Remember, the last meeting from the Fed was on June 16th, June 15th, and I was off by a day, but that was pre-Brexit, right? So we haven't, obviously, let me take a step back. We've gotten a lot of rhetoric from central bank officials in the committee who have done all these speeches and so forth, but we haven't really gotten any hardcore evidence or discussions amongst the committee on what the Brexit impact may have on monetary policy. So we'll be looking for that in the statement. As it stands right now, here's what Credit Suisse, here's what the Fed Fund futures look like. There we go. So as it stands, and again, I'll put this in the report tonight so you guys have it at home, but as it stands right now, the first material expectation, meaning above 50% for an interest rate hike would be on the March of 2017 calendar year. Okay, so they've kicked out expectations till March. If we do see that release come out tomorrow and this shifts, either bringing the expectation forward or pushing it back, look for the dollar to react on that basis. And especially if they kick it further out, look for a break of that support to really charge a larger decline in the greenback here. Good question, Eileen. Eileen's asking on my charts, your fib colors on TradingView, are the blue lines now retracements? What color are you using for extensions? Gray still maybe levels? Yeah, so on my previous charts, I had those marked for you, right? I'm still using the gray, Eileen, as sort of maybe levels, preemptive retracements where you're not really certain that that's a concrete high. A lot of times on a near-term chart, I'll just put a quick gray Fibonacci retracement just to give myself some reference. But no, I haven't color-coded them to the same extent. I can tell you this, Eileen, the darker colors will always be longer-term extensions, especially if they're brown or dark red. Those are usually longer-term extensions. And the darker the color I make it, typically I have a lot more conviction on that level or it's something more important to me. But let me know if there's anything that you have any specific questions on with that, Eileen, on any of the charts that we review. So that's the game plan for tomorrow. Okay, look for Brexit impact comments. Look for, I'll keep you updated on SB Squawk as soon as the release comes out. If we do see a shift in Fed Fund futures, again, this is just calculating, guys, what the markets are pricing in as it pertains to interest rates moving forward. So the probability of a hike still in March. Any questions on the dollar index? You just used blue on the 30-minute chart for the near-term retracement, so I asked for the extensions. Do you use blue? Yeah, I haven't discerned a difference between the color on the extensions and the retracements on TradingView yet, Eileen. The only issue is that every time you draw a retracement, it's going to take whatever settings you had for the previous retracement. So I end up having to go in there every single time to change the colors. But largely speaking, I'm still working with the, yeah, I know, right, Eileen? I'm still trying to work with the green basic retracement and blue extension. So I'll definitely make an effort to keep that as clear as I can for you. Mir says, US dollar weakness excuse me, gives opportunity to take in on the long side soon. Would the Kiwi dollar be the one to match for a short trade in your opinion? Yeah, I think so. We'll go over Kiwi right after this, actually. If there are no other questions, let's jump right in. Guys, if you have any questions on the US dollar, feel free to bring it up. Here's what Kiwi dollar looks like, Mir. And I do like playing dollar strength through, or dollar weakness rather, through dollar strength on a Kiwi dollar weakness, okay? I'm trying to think too quick here. But what I want to tell you is that I do have Kiwi at near-term resistance. I think you could pop higher into the monthly open, but the broader story here, I still look lower. So for the rebound that you're expecting to see in the dollar, this would be a nice candidate, especially if we're still holding sort of these levels here in Kiwi dollar. So from last night's update, let's do this just real quick. Here's what this thing looked like last night. Okay, the daily chart was pretty clear. We were coming into confluence support. That confluence support was defined by the 50% retracement and the 50 line. For the current operative slope, we're working off the high here. It's a pretty sharp slope. I don't like to stress these really sharp downside slopes. They typically don't, they're not super fruitful. But with that being said, you had some conviction here. Momentum was coming into 40 and sort of showing the turn last night. And obviously you had 3 days of failed attempts to break below that 50% retracement at 69.70. So inherently heading into the start of the week, your risk is for a move higher here. Here's, as I said yesterday, my first inclination is to look higher before a move lower. So here's what it looked like on the, this was a 60-minute chart. Here's what it looks like now in the 30. And here's what it looked like on 30 last night. So there's the resistance level. There's the break that you got right around, what was that? Around midnight here in New York. First target right on tap. That's 70.69, followed by the median line resistance, and that's exactly what we've tested and pulled off from. So from here, I do want to say a couple of things. The momentum signature definitely looks constructive. There's a couple of different things to look at. First, this is the highest breach in momentum that you've seen since here. Okay, that was also a consolidation to an upstretch that pushed higher for the, right into the close of the week. Prior to that was here, and that also continued to push higher before inevitably turning down. So momentum is definitely on a constructive path. The pullback that you got right after that spike higher found support at 60, bounced higher. Now you're getting some divergence into that median line. So I do think heading into the U.S. session, you do risk a little bit of a chop fest here, maybe even a pullback, but I wouldn't want to start fading the trade just yet. Okay, because the dollar is not necessarily at support. Now, be careful with this kind of analysis because you know, the dollar index doesn't carry the Kiwi, but I would like to see the dollar sink down a little bit lower to find support here before trying to fade dollar weakness. You know, largely speaking, I would like to see us break this median line in the dollar index to see a larger spill lower. So it kind of puts me at odds here a little bit, Mir, on the Kiwi, because if the dollar does end up breaking down a little bit more fervor, you might not get all that much Kiwi weakness to the downside. That said, I am looking for a little bit of a pullback from these levels. Make sense, Mir? But I am 100% with you. If the Kiwi does, or if the dollar index does pull back into support, you're absolutely right. Near term, from a scalping perspective, that does give you an opportunity to fade some of that weakness, and Kiwi would be one of the primary candidates I'd be looking at. Mir says, okay, yes, right on, Mir. My pleasure, sir. Any questions on Kiwi dollar before we move off? Nice play last night, right along, a little bit ahead of schedule here with our levels, but this is near-term resistance heading into the U.S. session. We'll be looking to see if the opening range gives us a topside break. If it does give us a topside break, like I said, look for initial targets. I take a little off near 70.94, but you're basically looking for a stretch into this region. Monthly open comes in at 71.29, 50% retracement at 71.38. So essentially, this range right here. That coincides on the 50 line, actually, a little bit later in the week, heading into FOMC tomorrow. Look at that. Okay, so that is Kiwi dollar at resistance right now. We'll check to see how that looks like into the U.S. Open. Next up on tap was dollar CAD. Dollar CAD continues to hold this near-term ascending channel formation. Here's what it looks like. First on the daily chart, we noted yesterday in the piece, look, this thing broke out, period. It's a breakout of any way you look at it. As we were talking about this, if you guys recall a couple of days ago, here's the radar chart from last week. Or actually, let me go back even further. Here's the update from the 21st. Okay, and we were talking about this major key resistance. Huge, 131.04 into 131.21, the high day close from May. You had basic trendline resistance. You had the median line coming off the lows. Actually, we've since adjusted this median line to use this low. But the long and short of it, this was huge. And certainly you saw a huge attempted spike at this on Friday. We pulled right back to start off the week, continuation, and really validating, in my mind, the breakout to the upside. Now, that puts the focus of support right back at that same region. So 131 into 131.21, still key support near term for dollar CAD. Here's what it looks like last night, or here's what on the daily chart. And the risk to the upside on a breach, especially if we're able to close above this median line today, would be this critical near-term region. You got the 324 high that comes in at 32.95. 33.12 is a larger 38.2 retracement of the entire 2016 range. And look what sneaks in right in between the 200-day moving average. So big region as far as the breakout level is concerned. That's sort of your initial rock solid ceiling with a subsequent target, and we are looking for the subsequent target at 33.82. That is a 100% 2 equal legs up from the lows. If you're on the swing side, Jamie's looking for entry near 31.35 from last night's piece. His target's near 34.50, so he's looking a little bit higher even beyond that 100% extension. From a scalping perspective on the way up, these are key levels we'll be looking for on dollar CAD. Here's what it looks like on the 30-minute. And here's what it looked like last night. Okay, so you actually had a perfect opportunity to get back on the long side. You had near-term support, former resistance at 31.88, 31.87, 31.87 being a 1618 extension off the low, 31.88 being the simple May high. And certainly you saw this thing pull right back, find support right there, momentum holding 40, beautiful hold, rally right back into the highs. So you might chop fest a little bit here. I wouldn't be surprised if it does dangle back towards channel support. Largely speaking, you're looking to buy pullbacks, still looking for that stretch into initial resistance at 32.95, 33.12. From the economic docket standpoint for CAD, you do get those GDP numbers on Friday. Now, it's going to be tricky to trade those because keep in mind on Friday we do get second quarter GDP from the United States. Here's what those numbers look like. Actually, I included it on the report. GDP figures. So we're expecting GDP. This is monthly GDP. It's important to keep in mind. The U.S. print will be quarterly GDP. So a little bit more of an impactful print. That being said, on Friday, we are expecting a contraction in the month of May of 0.5 percentage point from a pretty anemic growth the previous month. That comes out at 8:30 from the U.S. standpoint. Here's what the docket looks like on the U.S. side of things. Tomorrow, you do get durable goods orders. That's going to be something you want to pay attention to. Still expecting a contraction. This is the preliminary read for June, but a nice improvement from the previous month. More importantly, obviously, the FOMC interest rate decision. Then on Friday, GDP numbers for the U.S. are supposed to be really good comparison to the first quarter. The advanced read for second quarter GDP is expected to come out 2.6% annualized read. Remember, core PCE is going to be critical. This is the Fed's preferred gauge of inflation, personal consumption expenditure. We are expecting a downtick from 2% to 1.7%. That's pretty big. 2% is the target for the Fed, target inflation run. Obviously, if you look at CPI numbers, those are a little bit different. The metrics inside that are a little bit different as well. But the Fed has continued to elude the core PCE as their favored gauge of inflation. If that misses, okay, and we don't get a 1.7% print, comes in weaker than even that, I think you'll definitely see an impact on interest rate expectations from the Fed. Okay, that would be dollar negative. So keep that in mind. So on Friday, you'll get both of those releases at 8:30. Should be a tricky, or maybe a tricky event to trade, but we will keep you updated as that information comes out. Any questions on dollar CAD? Okay, dollar CAD, no change. Euro Yen was the final piece from yesterday's intraday update. Here's what Euro Yen looked like last night. I tried to get this out as soon as the break happened, but it was pretty quick. Here's what Euro Yen looks like first on the daily chart. Okay, so we've been within the confines of this long-standing descending median line formation. You saw that break and spill last month on Brexit. The break here to the upside, taking us back within the confines of that formation. And here's confluence support right now. As we noted, this is the monthly open. Okay, we're testing it right now. That's right around 114.56. You also have that former lower median line parallel, former support. We broke through it, now support again. And I'm looking for some near-term support here on Euro Yen, bottom line. As far as the scalp is concerned, from last night, we took out all the downside targets. So when we published this, we were trading right around 115.54, excuse me. Subsequent targets at 115.16 and 114.79, followed by the monthly open. Okay, so you saw a little bit of a bump here, but didn't take too long. We took out all those downside targets. Here's what it looks like now on the 30-minute. Okay, so the downside break, what was convincing about this break, typically when you see these formations, right, especially when it's held for 2-3 weeks on end, when you see a break, you don't want to see a dilly-dally sort of slow sideways move out of it. That kind of invalidates the formation that you were looking at. In order for us to have conviction on these, we want to see the market react. We want to see an inflection. We want to see a breakthrough and a run. So what was so convincing about this is that you didn't have too much of a convincing break, but look what happened. You came back, tested it as resistance, and then the waterfall cascade effect started. So, for Euro Yen at this point, if you break beyond this, you do risk a larger drop to 113.75. Okay, that's literally 100 pips lower from where we are right now. That being said, you're at near-term support. This is the monthly open. You're getting some divergence into those lows, albeit very weak divergence with both of those reference points sub 30. But I would expect that we could see a little bit of a rebound here before we break lower. Okay, I think it's got more juice to the downside, specifically because we already took out the 100% extension. So if it was going to be a simple correction, 3 waves, you would have expected this to hold. Now that we've broken below this, keep this range in view. Monthly open at 114.55, near-term resistance at 115.16. Okay, keep in mind, again, larger range ATR here. So plan accordingly. Any questions on Euro Yen? Bear with me one sec. Just want to see what this looks like. Huh. That's interesting. Okay. I don't know if I want to necessarily stress this slope yet, but you're seeing some touch points, right? Resistance, 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 breakthrough, support. Got a little messy here, but support, breakthrough, some support along the 50 line, breakthrough. That 50 line is now resistance, right? And that would put a convergence with that key support we talked about near 113.75, basically again into FOMC. There it is, 2 o'clock tomorrow. Interesting. So if we are to use this slope near term, I'm going to go ahead and bring down our bearish invalidation level. Last night we had it up here at 116.41. I'm going to go ahead and drop that to about 115.50 at this point, where that median line is. And hopefully if you get a rally into that region, you kind of want to see that hold as resistance to continue favoring the downside. I'll just leave this pitchfork here for now, guys. We'll see how that reacts heading into the U.S. Open. Euro Yen SSI as of yesterday was bullish, so this may be a correction. Mir, good point. Here's what SSI looks like, brother. So let's take a look at Euro Yen. Okay. So current SSI is actually negative on this Mir. And yesterday, it was at negative 1.53. Here's a good, what's the word? Here's a good indication of how I personally use SSI Mir. Looking at SSI by saying traders are broadly net long or net short is such a small fraction of the information you're getting. And in my mind, or in my humble opinion, it could be very misleading. The way you want to use SSI is you want to see how SSI is moving. A static picture of traders net long or traders net short, trying to extrapolate that into a bias, in my humble opinion, is, you're going to run into so many disastrous trades. So when I see traders going from net short, negative 1.53, to net short, negative 1.12, that's telling me that short positioning has started to pull back. Okay, so traders are closing out those shorts by buying to close the trade, right? As this grows into negative territory, that's more bullish. But as it starts to move off extremes in SSI, that actually is bearish. So this is telling you a very different picture. It tells you that suggests that near term, the immediate downside bias is vulnerable, but you still broadly want to look for this pullback here to turn positive. That's when it starts to get bearish again. Right now on its face, this is telling me that, yeah, you're at negative extremes, or you were at negative extremes, meaning that's near-term bullish. The downside bias is at risk immediately. And then once this flips to positive, that's when it really validates a little bit more of a downside bias. Does that make sense, Mir? I hope I didn't confuse anyone. He says yes. All right, cool. So with traders still net short, this is a very weak read, by the way. For SSI in general, as a rule of thumb, I only really pay attention to reads that are either negative 1.5 or greater than positive 1.5. But that being said, this does suggest that the near-term risk is for a little bit of a pop and then a drop lower. I want to see this start to wane even more and SSI turn into positive territory for me to really validate the reversal lower. Feel free, by the way, guys, to click on that camera button if you want to take a snapshot of anything that you see presented here in the webinars. Okay, so that is Euro Yen, checking a pretty major near-term support, and we're going to want to watch this region right here at 114, the monthly open at 114.55 for near-term support on Euro Yen. Okay, I want to touch really quick on some of the Aussie crosses. I know that we're holding Aussie longs from the swing side of trade. So here's what the Aussie looks like. Really nice rip, taking us above structural resistance. Looking good, honestly. I think, we're right on track with this one. So for me, I'm still looking for near-term resistance near 71.71, 71.75, by the way. I didn't want to put it on here because it's going to clutter the chart. But is the high day reversal close. So big region, okay, major resistance, and sort of the first target of which I'd start to slice off a little bit of my position. 76.44 would be the next topside target. The major resistance or key resistance isn't till way up here. So you got room on this thing. All right. And here's what it looks like on the 30-minute. I haven't really touched this on a near-term basis for any additional near-term exposure on it, but there is a simple and objective break of the initial weekly opening range. Keeps you constructive above 74.86, 74.90. Near-term resistance 75.34, break higher 75.70. Remember 75.77 is the high day reversal close, and that would be sort of a near-term target for me on the upside break. Don't think any change to our levels for Aussie dollar per se. Yep, they're pretty much all the same levels, guys. But again, feel free to take a snapshot of this if you need it for future reference. Any questions on Aussie? Remember tonight for Australia, guys, you do get the CPI numbers. Those are going to be important. Here's what it looks like. Let me bring that up for you. Okay, quarter-on-quarter CPI expected to come in at 0.4%. Year-on-year headline figure is supposed to come in at 1.1. The trimmed year-on-year, or the trimmed quarter-on-quarter rather, and year-on-year, these are your major headline reads. Okay, trimmed mean-on-mean is their version of our core, which strips out food and energy. So 1.7 is expected to drop to 1.5. Year-on-year regular headline CPI is expected to drop from 1.3 to 1.1. Not good things. Okay, not good things. And in fact, this only fuels the flame of expectations for further interest rate cuts from the RBA. Let's look at what those expectations are. If you take a look at the overnight index swaps for Australia, probability of a cut are at 59% for next month. And this is next week, by the way, guys, August 2nd. Okay, the markets are pricing in 60% chance for a cut. So if CPI misses greatly, remember, the global story for all these central banks right now is trying to stoke inflation. And strengthen the currency hinders that, and slowing inflation really ties their hands. So they've got to keep monetary policy easy. Are you going to publish a radar chart for tonight's Aussie CPI? It depends where we are, Francis. Go ahead and take a snapshot of this just for your records for now. Let me center this for you. Okay, go ahead and take that snapshot just so you have it for you. But yeah, I'll try to give you an update before that read. When's the release? Yeah, 21:30. Yeah, I'll give you an update tonight. No worries. No worries. But yeah, keep your eyes on those CPI numbers. As far as the week is concerned, that's going to be pretty much the long and short of it until next week. But this is the major highlighted print for Australia this week. Questions on Aussie? I just want to quickly, briefly touch on Aussie Yen. This is a trade also that we published last week. Look, it just hit one of those targets that we noted last week here last night. That was 78.40. That completes 100% extension, 2 equal legs down from the high. And you're getting some building divergence into that low, right? Price action making a lower low, the oscillator making a higher low. So you could see a little bit more chop consolidation here. The trade remains bearish below the weekly open. You're going to go ahead and drop down that bearish invalidation level right around 79.20. The weekly open here, 79.18. And subsequent downside targets, 78 and 77.62. Sort of going to be the big boy. A lot of confluence there of both near-term, long-term median lines, as well as a basic 618 extension from the advance off the lows. Now, not my ideal trade. Why? Because we're bullish on the Aussie, right? And with what's happening in the yen, well, I don't really want to short the yen just yet. Remember, yen is one of the strongest performers on the session. In fact, if you just take a look, at broader yen performance, so this is just gauging the performance of the yen versus all its major counterparts today, you can see some pretty sharp declines, right? In fact, Aussie and Kiwi seem to be the only currencies that are holding its own versus the yen strength that we're seeing today. That's my only problem with this trade. Aussie yen has a nice ATR. It's really clean as far as the technical formation is concerned that we've been following, but that's my only sort of issue. And I always try to warn you guys not to think like that too much. If I'm long euro dollar, but I want to be short euro yen, is that something I should avoid? We want to take every trade on its own merits. That's why I'm showing this to you here right now. Just to show you that we're coming at some near-term support. You could get a bounce from here. Broader bias remains bearish. And, we'll have to see, if we get a topside break above that sliding parallel, that might be a nice play up back into the weekly open where you would look again to start looking for some short exposure. All right, so that is Aussie yen. Hey, Francis, you're more than welcome, sir. Okay, one other thing I just want to turn over is the Euro Aus, and then we'll go over some of the sterling crosses. But Euro Aus looks like this. I know you guys have been following this with me because I showed you this last week. And still super clean. It's disgusting how clean this is. Long-term trendline support, dating back to the lows they made in December. Just zoom this out a little bit so you can kind of get the whole picture here. We came into that last week or earlier in the month. We talked about a rebound. Momentum gave us some divergence, pop higher. Had a technical formation there, basic median line parallel off the highs, a sliding parallel off that high on June 6th. Broadly caught those highs. And here again last week on Friday, right into that region and a rejection today, breaking below yesterday's range. And near term, you're looking for a support at that 50 line initially, backed by, again, key support into that same region. You're essentially looking at the low day close. Comes in at 45, essentially, 45.07. So I can't say I like Euro these days. Euro has been like all over the place. I really don't have a good grasp of what's going on in Euro dollar price action, but just another way to express Aussie strength. Euro Aussie turning over, continued Aussie strength. I don't want to go over the Euro too much. Here's the daily chart, guys, for what it's worth. I think this thing is just going to chop people up a little bit more. My initial inclination, again, on this trade is to look higher for a rally to sell. Now, areas of interest for me, the high day close for the month, which was an outside day key reversal, or it wasn't key reversal, but it was an outside day reversal off resistance. So that comes in at 1075. Also, the 200-day moving average, right in there as well. So my initial inclination with momentum holding 40 here is look for a rally into that region, and then again, we'll look to sell. That being said, there just hasn't been too much conviction in near-term price action. Here's the chart that's on the latest euro dollar scalp chart. No changes to any of the levels. We started off the week saying stay bearish below this. We broke above it, held it as support. Here's the upper parallel. That's holding as resistance. The range is too tight for me to really do anything with conviction here on euro. So we're going to sit this one out, look for a little bit more clarity on price action before we start to mess with that. Just wanted to bring that to your attention. Pound CAD and pound dollar. Obviously, pound CAD, we're still on the long side for the swing side of trades. Here's what we're looking at on the intraday. Okay, that formation that we highlighted last week, still in play, pretty clean. Just want to highlight this sliding parallel, offering some resistance here near term, but essentially I think you're still looking for a rally towards that 618, again, that we tagged last week. That's 74.32. The high actually came in at 74.54. So pretty It's a pretty big region that we still need to get through here on sterling CAD, guys, but broader story. Look for that trigger as well today. On a close above it, really validates that continuation. Subsequent topside targets take as high as 76.20 here, excuse me. And that's a basic 618 of the Brexit drop. Or, excuse me, a basic 38.2 of the Brexit drop. Okay, last of the currency block is pound dollar. Here's what pound dollar looks like. And I just wanted to highlight the opening range for the week looks pretty convincing here. Daily chart, still pretty ugly. The near-term chart, I know this looks a little messy here, but just focus on this median line formation. That's it. The actual median line has been nice support. That converges on basic trend line support off the lows right here. This is just a 618 retracement of the advance. You can see a perfect tag here last night, literally. Rally right back into the 50 line. And right now, as it stands, a very nice, tidy weekly opening range. Range lows at a key 618 retracement, range highs taking 31.65, and you look for a break of that range to validate the bias. On whole, I do think you could see a move lower in pound, but I do want to buy a breakdown, let's say that. I think that sentiment still is a little overdone. Remember, guys, Article 50 is likely a year out before they even invoke it for the actual separation from the Eurozone. So the story is going to be with us for a while. Pound is not going to just go on a straight shot to hell. And, I'm broadly looking for a little bit more constructive price action to take this thing higher. Any questions on the pound crosses, Aussie crosses, or Euro crosses? Speak now or hold your peace till tomorrow. All right, guys. So go over some of the radar charts from last night. By the way, I hope you guys noticed the changes to the intraday page. Just to give you guys a quick update, we're going to have the radar charts here just right on top with sort of longer term charts of what we're keeping in focus. May be updated daily, may be updated every few days, and the updates are all listed for you right here. Okay, these are just the updates. Each webinar right here. So a little bit easier and segregated to kind of easily find where you're looking for as far as intraday charts are concerned. Last night's radar charts, here's what crude looked like. And boy, it keeps playing out really well, this crude trade. So we talked about 44.68 for, a week and a half. We broke on Friday and closed below. That validated the move and break of that confluence support. The immediate target was the lower parallel or basic channel support. We got a tag of that, okay? And here we are right now. Today's close will be important. If we pull back and close above it, I would expect this thing to rebound before moving lower, but you stay bearish sub 44.68. Same level that we were looking at last week. Now resistance. Now has the 100-day moving average right there as well. Okay. Also keep in mind, or let me take a step back basically. So that's sort of, we already hit the first initial support barrier, and that's that lower parallel. From there, this is still the key support, and this is something that we highlighted weeks ago, 41.09 into 41.86. Little bit of a bigger range, but from a Fibonacci level, pretty important. And from just a price point level, has been a nice pivot in price, generally speaking. Okay, here's resistance, 618 extension, a 1618 extension, excuse me, off the high is 41.09, a 38 off the 2 is 41.86. So no change to any of the crude prices. Again, if dollar index finds some support a little bit easier to the downside, expect this to find a little bit of an acceleration, let's call it, even lower into that key support, 41.09 into 41.86. Remember, this has been dropping alongside the dollar here today, so if the dollar finds some support, I think it could push this even lower. Eileen says, like the updates, easier to find. Cheers, Eileen. Yeah, we've got a lot of stuff coming on in the pipeline, guys, as far as updates to the site and various different tools that will be able to be offered to you guys, even outside of these sessions, with regards to ATR, range indicators, and different gauges that you guys can reference throughout the course of the day to give you a better view of what's going on. So excited about some of that stuff coming down the pipeline. Okay, and last but not least, the gold trade. Here's what gold looks like heading into the U.S. Open. Again, I don't have any necessary changes to this. Here's what it looked like last night. I just wanted to highlight this basic trendline support, a basic 38.2, and as we noted, the May high at 13.03. This is still the key support barrier, guys. So even if you see a downside spike into this region, watch for that support. I'd be looking to sell a rally, initial resistance towards this sliding parallel. Today that comes in around 13.34. Bearish invalidation still at 13.55. Okay, so could get a rebound in gold here, but broadly still looking lower, sub 13.55. A break of this key support barrier targets 12.87, and more importantly, 12.66, 12.70, 100-day moving average, key 618 retracement of the late May advance. Any questions on gold? For gold, why are you looking lower longer term? Seems in an uptrend now. I would correct you, Eileen, in that I'm not looking lower longer term. I'm actually looking lower near term. Longer term, I'm looking higher. In fact, if you see the forecast, the quarterly forecast I read on Daily FX, I'm still constructive. But, and this is a capital but here, Eileen, look where you're coming off of. I mean, we can't be oblivious to the longer-term trend. This is basic trendline resistance off of the record all-time high from 2011, right? Resistance, resistance, and boy, I think you would count that as a resistance, right? So you're just coming off resistance. I think you get a leg down, probably get another spike higher, maybe into that sliding parallel there, and then see one last low, and then I'd look to buy it, inevitably looking for the breakout. I do think we clear this. I think we go into the 1400 range this year, right? But as it stands right now, you're coming off of a big, big resistance, multi-year resistance, right? So longer term, it's in a bullish formation. I don't think anyone's going to fight me on that. And in fact, we started off the year pretty constructive. And as those interest rate expectations for the Fed started to deteriorate, this thing really started to rocket. Real strong ramp up, right? But you're coming off big resistance. All we follow is price. That's what matters. The pullback here into near-term support could get a rebound. Inevitably, we'll be looking to buy at a lower level. Eileen says, oh, I see it. Need to scroll out further. Thanks for that extra explanation. Yeah, no problem, Eileen. Which is why we always stress, gotta have that daily chart. Even if you're scalping, you gotta have that longer-term view on what's going on. I needed to see why you were thinking that. Yep, you're in the right place. No question is faux pas, guys. Anytime. All right, so that's all I have for you guys here today. If you have any specific pairs that you want to review or any questions, feel free to drop them on the message board now. If not, we'll go ahead and wrap things up here. Again, we'll be back tomorrow morning at 8:30 Eastern for another session. Also keep in mind, we have Jamie's midweek strategy webinar on tap tomorrow at 2 as well. Remember, or at 1 o'clock as well, we're going to get the release of the FOMC statement at 2. Okay, we'll keep you updated on Squawk of some of those developments, as well as the actual link to the statement. We'll go over it here in the webinar tomorrow morning, obviously, but we will get you all ready for that in the AM with FOMC on tap tomorrow at 2. Guys, AMD, you caught me right before I said goodbye. Let's take a look at dollar yen. Eileen, have a great day. I'll see you tomorrow. Dollar yen, hey? So here's what the abomination is doing. Here's the daily chart. And for me, let me do this. Bear with me one moment. Let me just address this for you. That completed a 1618. I thought I had this drawn out, but apparently not. Oh, I did it on the 30-minute. Okay, so let me just show you on the daily chart here, AMD, and then we'll jump into the 30-minute. So here's what I'm looking at from the daily perspective on dollar yen. It rallied, momentum held 60 as resistance. That's not constructive, that's bearish. You made an outside day reversal here last week on the 21st. That's bearish. That came on the back of a 1618 extension tag at 107.44. I think we probed just above it. The high was 107.49. So from here, you're looking correction, right? For me, the major key support would be somewhere around this region. If this thing is going to hold and really continue to move higher, that's the support you'd expect. The monthly open comes in at 103.15. The 50 line comes in just lower. So that's sort of where you are in trend. As far as the 30-minute chart on the near term, one thing I do want to check, it's just staring at me in the face here, is an extension off the high. Okay, the 100% extension, you guys see where that lines up? It lines up right on a 38.2 of the advance. You see that? So I'm not going to put it there just so you can see the level clearer. But, in fact, you know what? Let's do this. Let's get rid of this 38.2. And we'll take on back that 100%. There we go. Near-term resistance, you broke support. Near-term resistance, 104.65. And let's see if this pitch has any validity to it. Well, it's not the sexiest thing, but I consider leaving it for now. That 50 line also coinciding on that 104.65 level. So I'd be looking for near-term resistance there. In my mind, I still think you risk that drop towards the monthly open like the daily chart suggests. That key pivot in support. Yeah, and momentum looks like it's pretty bearish on both time frames. So I would tell you that I think the risk is for a move lower here. You might see a rebound back towards like 104.65 in U.S. trade, but you'd inevitably be looking to sell well below that region. If we break above, I'm neutral. I don't really like messing with the dollar yen intraday AMD, but that's just my personal opinion. Watch 104.65 as resistance. If you see resistance or support triggers into that region, exhaustion highs on near-term charts, that's sort of be an area of interest for short exposure, looking for 103.73, and then this region is key. Okay, 103.18, 103.36 sort of would be the major downside target I'd be looking for. Make sense? AMD, let me know if you have any questions on dollar yen. Think you might have a little bit lower to go on this thing. All right, guys. If there are no other questions, we'll go ahead and wrap it up here for real. I will see you all tomorrow morning. AMT, you're more than welcome. I appreciate that. I will see you tomorrow morning at 8:30 Eastern for another intraday webinar, guys. Have a good one. Cheers.